Welcome back to another StockTwits Q&A session. We're going to be answering your questions live, but first we want to give you a sneak peek into Scott's trading world. Check this out. We'll be right back.
I'm in a little MGM and I'm still in OIH. I bought it this morning at 107.50.
Apple's good.
You don't buy in the first 5 minutes of the day.
60's big.
I live in Jersey City. I was born in Long Island, went to school at Sony Albany. As a firm, there are 5 partners and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is on a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is.
You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother.
All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265, and if they're right, they make money. It's a good setup. Stick with the win.
Okay.
It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Scott, technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade and I could provide for my family.
Where's the breakout? That is the next evolution.
Good afternoon, Scott Redler, T3 Live. Welcome to today's version of the Q&A for StockTwits. We haven't done it in a while, so I want to wish everyone a happy new year. If you haven't tuned in, I'm here with Brittany. We're so happy to have you back for 2013. And you know, with the market at highs, I feel like the questions are just rolling in, so I'm just going to go right into it. Brittany, take it away. What's the first question?
Well, I think we should talk first about the markets being, as you've called 1,500 for a while now. S&P touched that level today. What do you make of the action today?
I think the action today was every time you get to a psychological level, you know, you get a little bit scared. And since we've had such a big move to start out 2013, it makes sense that we get a little bit of a pullback off 1,500. You know, the problem is that every time we have a little bit of a pullback, everyone's trying to call a top. And unfortunately, even for me today, you know, yesterday I pared down some positions. Today I'm like, you know what? I don't want to, you know, be the guy with 12, 13, 14 longs on. Let me pare down to 4, 5, 6, 7. And then it did seem as if we were going to have one of those slight push-through failures for a bit of a rest. But, you know, every time that happens, then the market just doesn't fall apart. And, you know, what's been going on is just the rotation in this market has been so robust that every time it seems as if something's going to lead us lower, the money goes somewhere else. So as far as just say the chart of the spiders, so if we take a look, like you said, what, 1,500 was the question? What now? Okay, here we go. So take a look here. Now I talk about the 8-day and the 21-day moving average. And look where the 8-day is right here. First of all, you take a macro little look at the market here, and it's been really acting well all the way back from the October 4th lows. Okay, you talk about macro patterns here. This was that big red dog reversal back here in October. Here is that wedge type pattern that wound up triggering a nice move last year this time. Remember that move? That was that first quarter move where we followed the 8-day, never broke the 21-day until right here. Then if you remember real quick, take a quick trip down memory lane. Finally, we closed below the moving averages, and that's what gave us that move lower into June. And then we had that red dog reversal right around here that, you know, over the summer gave you a little nice gap up, and then there we went again with you know, a trend to the upside. Then we talk about, you know, times to have risk on, risk off. Here again, follow the 8-day moving average. Look at that. That's why I love using this, because whenever we're above it makes it pretty easy to have a portfolio approach. Here was a little bit of a topping tail. Then we broke this area, this was like 1440, you know, in October. We had a pullback into another nice hammer bottom where you had a huge gap that got defended, and then lo and behold, look where we are now. So you want to take a micro look here, you know, something to you know, just to take a look at it a little bit closer up. So let me go like this. You know, here we are. We took out 1474. This was your gap up in the start of the year. This gap up was a nice 2-day move. We digested it really well. The 8-day played some catch up, so you had a little bit of a pause. then we went again, and then the 8-day caught up, and now look where we are now. We're pretty far extended from that 8-day moving average. So today, you did see a slight, I'd say very slight, push through, so quote unquote failure, where we traded above 149.50, went to 150.14 and came off. But I don't know what type of pullback we're going to get. It seems like every time we pause, it doesn't pull back much. So I would say here's the 8-day. So I would almost think that if we get a pullback to 148, because I think I went a little bit heavier in my spider hedge, I'd be very happy. I think that'd be a great spot to get a little bit longer. So right here is 149. This is 148.86. So if we were to break this little 2-day range, perhaps we get a little bit of a pullback back to the 148 area. But overall, market's looking really healthy. So from a short-term basis, we're way above the 8-day, far away from the 21, and look where the 50 is. So overall, making it very easy to stick with the trend.
Well, LP on that note has a question that says, with the S&P poking through the 1500 level, what would be your advice on setting stops on stocks that keep making 52-week highs?
Well, you never really want to be in a core trade as it's making 52-week highs, but usually if you make one 52-week high, then it extends, because in order to get, like, just say, your 52-week high last year was $50. In order to get to 70, you got to get through 50 to get to 70. So usually the strongest stocks are the ones you want to stick with that are making new 52-week highs. And then if you're a trader, you want to wait for some consolidations and you want to continue doing add-on type trades. So at this point, everyone's looking for this major reversal. If you were to see some blaring reversal, let me give you an example. Triple D. It's an innovative company. It's been on a roll the last 2 years, and everyone's scared to stay with that type of winner. And if you look at Triple D, so to speak, every time that it's made a new high, it's had a bit of a move, and it's been a little faulty. This was the last time it made a new high going into last January, and then boom, it gapped up, closed the lows, and everyone was saying game over. And what did it do? It did a little bit of a time consolidation, and then it wound up continuing to new highs. Then you had a big gap up. Okay, what was this, a few days ago? And then yesterday, it gapped up and failed, and then all of a sudden it took it in stride today. So here we are, the stock's still trending. Obviously, it's trying to let the 8-day catch up, but overall, it's been in a very, very strong trend. You go to the weekly chart, it's been an unbelievable 2-year move. Whereas this stock, if you look at it on a weekly basis following the 8-day, I know it's very, very extended, so it's hard to chase. But sometimes the hardest thing in this business is to let a winner run. And this stock with SSYS has been, an unbelievable, innovative group, on its ways. This one's a bit choppier. And stick with it until the trend changes. And for, say, the weekly chart, if you're a macro investor, it's not even close to breaking the 8-day. And then it's still above the 21 and the 50. You go to your daily chart. If you want to be a little bit, more micro, okay, I would say at this point, like something like this. Here was where it gapped up and failed. So if you use that as a sell signal, okay, but if you didn't rebuy it into support here, you might be a little upset if it continues. So remember right here, last time this SSYS, had a 3-day pull-in, I remember Mark was trying to target it, I was trying to target it, bought it here, sold it there. If you sold it when it broke this mini trend line right there and you didn't buy it back, how'd you feel when it made new highs? So if you're going to manage these positions on a micro basis, make sure you get back into it. If you're going to hold it on a macro basis, really don't get out until something changes. And for this stock, it hasn't really broken and closed below the 21-day in so long, so just stick with it. And typically the healthiest sign is when a stock makes new 52-week highs.
Well, Spy Surfer here says, Scott, in your opinion, what's the probability that the Spiders breaks the highest close of October 2007 at 153.84?
I know last year I started talking about the overall macro pattern in the S&P. I think it was over the summer when everyone was saying the world's going to come to an end. I was like, you know what? I'll put 1440, 1470 out there. And also I think by 2015 there's a good chance we hit S&P 1700. We've been in this decade-long range for the past decade or even more, where if you had a macro cost average approach, you did well. If you tried to time it with intermediate trends, if you were good, you made some alpha. But overall, we've just consolidated a big move of the 90s. So if you take a quick look at the chart that we'll go back to the spiders, your question is, can we take out the highs? So this was the daily chart that showed the nice trend since the start of this new year. That was a continuation of the trend that started, November 16th, which was also a continuation of the trend that started back here in June. So anyway, you go to your weekly chart and you will see that overall we've cleared some nice barriers here. Okay, we cleared the old high of last year, which was right here. So we're still making higher lows and higher highs. So here is the low, here's, oops, sorry. You have then a higher low, a higher low, a higher low, a higher low, and then here's your highs. And we're still continuing to make higher highs. Here's a high, higher high, blah, 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 all the way up. But then look what we have in front of us. You have a massive, 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 Brittany, did I say the word massive?
You did.
Massive, that means big. What's the definition? Big, large, hard to deal with. So massive double top. So if you take out that double top, chances are anyone short against that double top covers, anyone waiting to get involved in the market, the headlines will be going nuts. That's when retail gets back involved. That's when you get mutual inflows. You take it out and you don't just stop. So anyway, you go back to the chart of the spiders here, as this trend has been continuing. And as of now, it seems like there's really no resistance until about, what is that, 152.89. So that's really about 1530. So if we go straight to 1530 without a pullback, you're going to see shorts annihilated, by the way. I'm hoping maybe we get a little bit of a pullback, to 1480-ish, or 1476 before that happens also, but who knows? We might just continue and go outside this band. So here's that, and then right above it, you have the highs here of 153.62. You have this high here of 153.78. So I think it's only a matter of time before this gets taken out. And you go one more time, just go to the monthly chart, and you'll see everyone keeps complaining about this big range that we've been in for the past decade, which was definitely methodical and hard to deal with, and times were easier than others. But what did it really do? The move from 1995 all the way up here just consolidated a really big move. So with that said, on a monthly basis, we take out this double top, it's not going to just stop right there. And I do think that at some particular point, it could be this year, it could be next year. I think that we're going to see 1700 and the Dow's going to be at all-time highs. And there's going to be a lot of money for those that continue to potentially watch a show, follow us, educate themselves with other different educational sources, and just continue to have a process to approach the market based on the time frame. And I do think that this market's going to continue. It's just going to be whether or not you could handle it. And if you haven't handled it well this far, if you've been just shorting it, if you've been just avoiding it, it's never too late. It doesn't matter if you're 20, 30, 40, 50, 60, 70. There's money out there to be made if you learn how to approach it. And right now, the trend has been higher, and just don't fight the trend because there's just way too much rotation and some decent action out there.
All right, well, let's talk some Apple. Clearly creating some buzz still after reporting earnings. Marius J says, Red Dog, talking Apple, of course. Do you have any bread and butter trades on it, intraday and swing trading basis, he's asking?
Apple. It's like, you could have turned on the TV and every 10 minutes they talk Apple. And if you would have closed your eyes, in September, actually on my 40th birthday, when it was at 700, and if someone said, you know what, Apple's going to go from 700 to 450, and at the same time we're going to be at 5-year highs, you would have been like, you're out of your mind. You'd have been like, there's no possible way that Apple could pull in 250 points and then have the S&P at 5-year highs, some of the mid-level, mid-cap 300 or 200 or 400, whatever it is, at historic highs, and that's what the market did. So it's showing you that psychologically, the market's been able to put Apple in the corner and let other things go. And then sometimes it's hard to disconnect that, especially when you're used to it being such a market leader. But overall, the market's done a very good job. So now, you turn to Apple now, there are a lot of question marks. What happens if you're an investor? What happens if you're a swing trader? What happens if you're an active trader? I think it doesn't matter who you are. You need to take a tactical step-by-step approach with Apple because it's been broken. It's been relatively weak. Every rally has been sold. It's been controlled by a downtrend. Every time it's tested a moving average, it's broken it. So there's been a lot more money to be made on the short side versus tactically playing a 2-3 day bounce, which is what I've been trying to do. And then here we are, day after earnings. People are like, was earnings priced in? And if you look at this chart right now, obviously it wasn't. Take a look here. Okay, you go to the chart of Apple and you will see, yes, look at the size of this decline. First of all, here's your little head and shoulders top. Here's when it broke the 8 and 21 day moving average, which I wound up, saying, okay, I'm going to get out of this trade here. Maybe it'll be a trade at the 50 day, which was a 3-day trade before breaking it, and then methodically going all the way down below the 200 day till finally you had a bounce to this downtrend that controlled it. Another move back down to support that wound up, not holding for then. We remember this little trade in here we had. It was a nice trade into the new year, but then what happened? They gapped up into resistance, failed, and then boom, lo and behold, this was the earnings. Okay, and look at the size of this gap. So Apple gaps down $50. Okay, Brittany, if Apple was, if it was priced in, and just say you were able to buy Apple $50 cheaper the day after, you would say, okay, I think it's a bargain. But you know what? People didn't say it was a bargain because it would have opened down 50 and closed down 20. So that means the gap would have been a little bit meaningless. But for it to open down 50 or so and close in the dead lows, that means there's still sellers, there's still pressure, it still has a lot to prove, and it's still in a void. So for me, I traded it tactically a few times throughout the course of the day. And there was no commitment to it, and there was more money to be made even short there. So you go back to this chart. So what do you have to do here? Okay, look at this day, okay, and here is the low, right? The low here is 450 and a quarter. This is what you know. 450 and a quarter is a level. Then you have 443, which is the start of a gap from earnings, almost back before 2012. And then you have the gap fill at 425. And then what do you have as resistance? Okay, you have today's high. So, this is what you know. You know today's high, today's low, where the gap starts in that. You also know that it's in a horrendous downtrend where you haven't seen, a buyer in sight higher. It's below all the moving averages. It's broken. But then people are like, oh, but it came down so much. Then you go to your monthly chart, okay? How much did it really come down? If you look at the monthly chart of where it came from, I don't want to start scaring that, bejesus out of people. But here was a breakout, here was a breakout, here was a breakout, and then this was one of the last breakouts right around 410. And if you also look at this head and shoulders pattern, with a 700 to 500, you go from 500, it really takes you into the 300. So at this point, it has so much to prove. So if you're looking at, we've talked about taking the Apple name away from the chart, and the Apple chart, when you have the market at highs and Apple at lows, it's not ready yet. So for me, tactically, I'm going to play it by ear. This is the low. If it opens below it, see if it comes back above. The longer it stays below this gap and this gap doesn't get filled, the longer this gap is going to control the direction to the downside. And hopefully you saw a lot of these signs along the way. We've been saying it's a tactical play versus a swing trade or a long macro play ever since it broke this level or gave way to the 200-day or did this rally and came back real quick. Remember, gyrations, we talked about gyrations are not healthy for a stock. It's a way for institutions to get out of it. Well, it's continuing. So at this point, it's kind of sad to say, but the writing's been on the wall for a while. So if you're just thinking about, oh, what do I do now? It's a bit too late. Hopefully next time you learn, when you see trends change and you see pressure and you see relative weakness, you get out when the stock breaks the 50-day or the 100-day or the 200-day. You don't get out after a 240-point move to the downside because you can't handle it anymore. At this point, we'll take it day by day. When something changes and something's compelling, then maybe we'll be able to stick with it for more than just a trade.
Well, interesting question from Tendon here saying, does Apple prove that technicals override financials?
I think it's a little bit of both. You never really, sometimes like think about RIM. I remember RIM when it was at 40. Every piece of good news was sold before, it really, the fundamentals caught up where everyone was not buying a BlackBerry anymore. They were all buying, Apple, or they were all buying the iPhone, or you had Samsung and this and that. So many times the market is forward-looking and the stock and the action knows a lot more than you know. So granted, everyone's saying, okay, Apple's so cheap, it's got a third of its market caps in cash, blah, blah, blah. P.S., it did have this first year-over-year slowdown. Who knows if next year will be even slower. So, it's slowing. And unfortunately, we've talked about them. They should have split their damn stock a while back. People don't look at a $400 and some stock as a fundamental play just because of the price. People just psychologically don't do that. So if they would have split their stock, maybe, a cheaper number with a dividend, with a PE, people would be more comfortable owning it versus, thinking it's a growth stock. And if this growth isn't there and it's still 440, or 450, it's just not ready. So with that said, I am a believer in technicals. Okay, I say price action doesn't lie. Everyone wanted to upgrade the hell out of Apple at 700 to 900, and now everyone's downgrading it down here at 450. And I just think the fundamentals are usually behind the price action. So listen to the price action. That usually trumps technicals. But then, you have to understand what's going on fundamentally, and usually both stories do collide and combine at some particular time.
All right, well, let's move on for now and talk some Google. Okra Peas saying, what do you think of Google going into February? He's playing with February calls and needs input on if the major move is over. He sees 770 resistance near term.
I think he's pretty dead on. You had an earnings report that was treated much differently. you had a big gap up and it had a little follow through. Then today it actually traded above yesterday's high to give some follow through, so it showed power. So I talked about, some healthy digestion would be good to create a level to trade against. The market didn't even want to do that. And if you look at Google here, much different story than Apple. Look at the size of the gap up from earnings. Look how it's above the 8-day, the 21-day, the 50-day, and 200. Okay, so this gap up, so if you didn't take it into earnings because you don't do that, you could have bought it yesterday or said, I'm going to buy it today, or add to it when it trades through yesterday's high of 749, and you had some follow through. So this is showing power. Big gap up, sizable, and follow through. Okay, so right there, that's showing you that Google has power here still. And then if you look at, like you said, the resistance, there is resistance right here. This is the prior high. This was 763. And actually, what is that? This high here is somewhere 774. So you will get up there, and then people will probably the bears will try and sell it down and say, hey, look, double top, double top. But at this point, it's acting very healthy. This and Amazon have been the best acting high beta names. You go to your monthly chart on Google, and you will also see that, overall, the reason why it was my stock pick of the year last year for high beta was because of this tight channel. Stock put a high in here in 2007 when it was just search. Now it has the Android, now it has YouTube, it has so many other things. So here was your breakout in Google on a monthly basis. It took 4 years to consolidate. If you want to say this is sort of a cup with a high handle, 300 to 680-ish. So you put 300 points on 680 and you get like 9 something. So if once it clears this area, the prior high, this 774, I do think that you will have a market leader that's continued, and hopefully they do something smart. Next time they have earnings, they say they want to do a stock split, kind of like when Baidu was 800, they did a 10 for 1, and it wound up going to like 1400, which I don't think Google should do that. I think next quarter, split your damn stock, take the ego out of the way. It's not a high price. It'll be much better for shareholder value. But right now, Google is acting very well. And just stay the course and don't just think it has to go lower because Apple did.
Well, let's move on from Google to Yahoo and talk. Mab here wants to know if you're buying and holding Yahoo through Monday's earnings. But we have from LP, oh no, sorry, lost my place, JJ here saying, Scott, please address Yahoo, a new 52-week high and a good entry point.
Yahoo's actually on my list this year, my 2013 stocks that could continue. Last year I talked about the channel, and I love channels because typically channels are when institutions start to consolidate, buy stock, get rid of weak shareholders, control it, so then it could finally go. And Apple did that last year when it broke above 1660. So you look at the chart here of Yahoo, you'll see this was your first channel on the daily. Let me show you. Boom. Look at that. Okay, this was a long time that it was sitting in here. Sitting in this channel, people knocking their head against the wall, probably, shorting bottoms, buying tops, getting nowhere, and then finally it busted up like it was an earnings report that came out, and it wound up igniting it. It traded above the channel, okay, and then ignited around 1660, and then what did it do? It followed the 8-day moving average up into the high. I was involved, I think, somewhere around here, and on this gap up where it came in, I got out of it, okay, which was unfortunate because sometimes, it went lower. Everyone's like, hey, Red Dog, great exit. Because I saw this, gap up failure. I was like, oh, it's a little tired. But what I didn't do is I didn't get back into it as it wound up holding the 21-day above the 50-day. And now look at it. Nice clean move, nice breakout to highs. So right there, it's looking good. Okay, granted, if you bought it here, you're a little hesitant up there. But overall, you go now to your monthly chart, which is a different time frame, another channel. Okay, look what it's doing. Okay, it broke above this mini channel. It's on its way to a bigger resistance, and the reason why in my 2013 note I said, Yahoo can get to 23 to 24 was because this is, you can actually even go a little bit higher. This was your next big resistance. So overall, it's cleared a lot of levels here, and I do think that between digital and the way media is dispersed these days, and the new CEO that everyone likes right now, you could see 24 to 25, but it's always a little dangerous, to hold stock into earnings. And for me, I typically don't hold the equity into it. I go with an option play because risk is premium paid. If you plan on holding Yahoo for the next 3 years or whatever, and you've held it through 5 other reports, you could do so. Maybe put on a collar, sell some calls, buy some puts so you could stay with it. You'll hedge yourself a little bit, but your downside will be protected if that's what you do. But the technical action here in Yahoo, it seems very positive. I love a stock that breaks out, holds these moving averages, and this doesn't seem to have resistance until about 24.25.
All right, you guys are sending in great questions. Keep them coming. We're going to take a quick commercial break, and we'll be right back.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back answering your questions live. Scott, we've got one here from Trend Trader about AMD. He says, Scott, did the long-term downtrend reverse on the daily? What about a potential double bottom going back to 2008?
I think some of these old school mega caps are getting reborn a little bit because there's so much liquidity going around. People are like, what could we go after next? And AMD didn't have a great report, and it still went higher. So at this point, stock's been battered and bruised. It's been in the doghouse. I call this like a treasure for trash trade, because someone who's been holding on this thing for the last few years, it's in that trash bin. But for someone who's saying, okay, I like the technical setup here, it looks oversold, it can go up, it could be your treasure, because these little guys, when they go up, they have big percentage moves. So if you look here at the chart of AMD, let's take a look. I haven't really looked at this in a while, but you take a snapshot here. This was your downtrend, right, from the highs here. All right, This is when it seemed to have broke above it, right? Here's your descending channel, following it for a long time, broke above it, didn't scream, but then it held above it. And now it's done enough sideways action that it's actually above the 8 and the 21 and the 50. And today, it made a new high today. It poked its head out. So at this point, you do have a gap here that gets filled at 313. So I wouldn't say that's a blaring move, but that's a decent percentage gain. And then sometimes these little guys or these old school guys come up and retest their 200 days. So from 2 and change up to 3 to 4, everyone talks about the LBO. You saw what happened with Dell. You saw HPQ come back to life. There's a shot here that this could be one of your treasure for trash trade. And just to quickly go through a few other ones that woke up this year, look at something like Hewlett Packard. Okay, same type of scenario. Was in a major downtrend all the way from the highs. All of a sudden got unlocked right there. Okay, had a gap up. One of my swing trading concepts that I talk about in my swing trading course is stocks can change their composure on a gap up as long as it holds, and it did. And then it's been continuing higher. Now it's consolidating, going sideways. So this Hewlett Packard had a really nice dog, the dogs of the Dow theory, where new money came in, and look how it's coming close to the 200 days. So, that's maybe a decent guide for your AMD. Dell also, well before the whole LBO scenario, this too, when, left for dead because of the PC sector slowing down. You had your trend right here that somewhat got broken right there. 2-day up move. You saw nice, some commitment to it. Then you had your flag type pattern and pow. So with that said, it's almost filled this gap, and I think that there's a little bit more room and some kind of deal could happen. I think a lot of the fluff is out, but here's another old school mega cap that had a really nice move. Cisco continues to move. At the highs. Look at just for old, concept-wise. Look at this gap up right here. This is when, Cisco went from a nothing to a decent scenario, gapped up, held it, and then continued. What did it do? Followed the 8-day, came in, tested the 21-day, went back above the 8-day, and still looks good. Looks like it's going to break again to the upside. We'll see what happens with the earnings. But so there are ways stocks can be reborn that have been in, the doghouse for a while, and that's with breaking a long-term downtrend with a gap up for some power. And I wouldn't say AMD quite did that, but if you're holding 8, 12, 14 positions, AMD seems like it could be one of them. But just remember, these dogs of the Dow are these laggard type trades that people go for towards the end of what could be a potential move here. They fall fast. So just make sure you have your eye on it and don't fall asleep behind the wheel.
And good to be aware of that risk. And speaking of risk, you and I have talked a lot about in the past about Chinese names and the risk involved with ones like Baidu and Sina. And Trading Looks right here wants to know what your take is on Baidu and some of the other Chinese names like Sina out there. Seems like they took a hit today, he says.
Well, there's still, the market's trying to still get some trust behind these Chinese names, because every now and then you'll get this big accounting scandal, and then they'll just blanketly sell all of them. They'll just be like, okay, I'm done with these Chinese stocks. Who could trust them? They're not, what they say they are, blah, blah, blah. You also had, everyone talking about a Chinese hard landing over and over last year. So they got battered and bruised as well. So I know, guys on my floor have been trying to watch Sina and Baidu as they came back to life a little bit off the lows, and they were also reborn, but they're kind of stalled in front of their earnings. So I know, just say Baidu first, it's still hanging around. Just so everyone wants to talk to me, what's a red dog reversal? I'll give you an example here. First of all, this is when Baidu tried to go the last time. Here was your gap up, followed the 8-day, and boom, look at the size of this 2-day move. That got us out of some. I think we were trying to trail it there. Wound up having a big move to the downside. What happened right here? A red dog reversal. What did it do? Made a new low, came back above it, showed a little bit of a change of composure, and then what'd you have? A quick move up, showing you appetite, and then it continued. So with that said, you had a big move back to test, look at that, the 200-day. And then from there, that acted as resistance. So it's been slowly coming down. All right, so what do you have here? You have a very choppy, frustrating flag. So what I would say is with this, if you want to be in a tier 1 small in Baidu, be in it, for it to get going, it really is going to have to, I don't know if it's going to take earnings, but I think above 111 to 112, it can continue, and then perhaps it's back on its game as Google's really strong and China's also, their whole market's recovering. So if people get confidence in Chinese stocks, Baidu should be in the game. And Sina, as far as this stock, I haven't really looked at it as much, but at this point it seems as if it did a little bit of a push through failure. It has room, it's above the 200-day. I would say you'd probably want to see it hold this level. You do have a nice little trend that developed here too, so it could come back and retest this. So I'd say as long as it stays above this area, you can stay with it. But just know these Chinese stocks are prone to news, are prone to reports from a Citron or a Drudge report or this and that. So keep, don't be too sizable. I would take more of an intraday versus overnight because you never know what's going to happen here.
Well, LP767 here is clearly following you. He wants to know if you could share your thoughts on why you bought Wells Fargo today instead of waiting until it clears resistance at 36.
Well, I bought a feeler. I've had a lot of success in the past few months with the banks. Bank of America was my favorite. It broke above 995 and it went. I also traded Goldman when it broke above 121 and had a nice move. And Wells Fargo has been lagging. Usually it's a leader and usually it continues. And I was looking for a tight pattern, something that could join. So if you look at Wells Fargo, it's somewhat like that. Okay, first of all, it's really not a great scenario to do when you have the September highs here. Okay, and your October highs, and then if you look at the XLF itself, well through the September and October highs, so this stock is showing relative weakness to the overall group. So I'm going after a laggard, but sometimes when a rally broadens, the laggards come into play. It's not like just say Bank of America that look how the move above the September highs was so great and went to the highs here. This was a stock that I went with. That was my my bread and butter, so to speak, going into January. Here is your levels to buy and get involved. And then finally, when it broke, this upper level, this is when I sold some. And then on earnings, I got out when it broke this 1130. But unfortunately, we talk about not getting back in. I guess this is what I said might happen here soon. It's trying, So here you are with this one. So this is kind of tight, trying to regain its composure. But with Wells Fargo, it seemed as if it was ready to go. And it wasn't a great close. I'm not that happy with it. You have a little bit of a wedge type pattern here, so I figured perhaps people would go for it. So at this point, I'm in just say a tier 1, and if it were to get above, this high here, just say this is what 35.46 in the next few days. I'll probably add to it, and then we'll see how it handles the prior highs of 36 to what is this 36.60. So it's a little choppy. It is a laggard, but it's above the 8-day, above the 21-day. It's in this range, and I just think that people are looking for things to do, especially in the banks, and this Wells Fargo could join. My out would be, plus it also has earnings out of the way, which means I can't get sandbagged by a pre-announcement or earnings. So I would stay with this, and if it breaks below 34.88, stop yourself out, because that means it didn't do what you thought it would do, and then maybe it just needs more time before it gets on its game.
All right, Jay Lagoon here chiming in saying, Scott, do you think Sony still has much room for a continuing rally, especially with the rumored PS4 in the spring?
I saw Sony the other day. It had a really nice move, and someone actually said, Redler, why don't you buy Sony? And I had like 13, 14 positions long. I didn't want another one. I should have listened to him because it did have a nice move. And if you look here, so did the Japanese market, so to speak. And if you look at, again, a dog type play, this broke up right there. Okay, you had a nice wide range bar, cleared resistance. Resistance right here was like 1157, closed on its high, so it made sense to take it. And now what did it do? It took back the 200-day, so acting better. I don't know exactly what's going on with the company, what they're coming out with PS4, this or that. But there's room to 14, and then there's an unopened, there's a gap right here that gets filled up to 15. I think people are probably turning to Sony because, like, you know, the Nikkei is having such a good run that they've devalued the yen, so maybe it's cheaper to buy Sony again. And they were the first ones, and I'm not the Walkman, but like I remember buying the Sony flat screen when they first came out, but I think they just fell behind a little bit, and that's why I think last year when I bought my house, I bought a Samsung, which is awesome. Didn't even realize it was a Samsung then. But anyway, it's off the lows, it's acting better. You could stick with it, trail with it, look at those resistance points, and then just judge the action along the way.
All right, here's kind of a fun question. We have one from Turtlehead saying if you could own one and only one stock or ETF to hold for the duration of 2013, what would you choose?
Well, it's such a tough question because, you know, there were 3 different intermediate trends last year, and each intermediate trend that we followed had different leadership. So same way like this January was a little bit odd compared to prior, you know, rallies, so to speak. You know, tech really lagged. Apple was, you know, a disaster, but other things went. So, you know, every quarter money rotates. Like even money's rotated back into the ags, they've rotated back into the OAHs, and then gold's been weak. You know, so I would say at this point, I guess if you had to be in one ETF for the remainder of the year, I do think that the XLF could see 19. So if you look at the XLF, which is a proxy, well, actually that's not such a big move. That's a proxy for the financials. You go to the monthly chart because you'd want to take a more macro approach. You know, it might even be able to go higher. If you look here, you know, it just started on, I know it's had a big move, but on the weekly or monthly, it just started to go. And then, you know, this will be resistance. So percentage-wise, I think this is a nice percentage move, and I guess there is a small chance it can get to this 24 level. So I don't like that question because things change. But as of right now, according to this pattern, this looks like there's room to somewhere around 20-ish and maybe even a little bit higher. And that's, I guess, if you had to be in one ETF, that's a good one. Nice bang for the buck.
Well, let's get in just a couple more stocks before we're out of time today. GDen, right, just wrote in right now asking for your thoughts on Bank of America and if it's bear flagging.
Bank of America was the best stock for me, or in tightest, and it showed the most relative strength from November through December. It went very far, you know, talking about it from when it started at $8 and then the breakout above $9.95, and then it got a little faulty around earnings. The earnings weren't so bad, it just wasn't enough to keep it going. So I do think Bank of America, you know, you want to go, first of all, wow, look at this on a longer term basis. All right, that's why, you know, I came out with this as a potential target on Bank of America, you know, between anywhere, actually, I might even raise it, between 15 to 17. And if you look here, the 200-day on the monthly isn't even until 22. And this is when it was Bank of America without Merrill Lynch. But anyway, nice breakout here. Let's go to the daily chart, which is something that's a little bit more conducive of what we look at. So here was one breakout. This was right in the summertime when it broke above 8. I think we talked about it on Bloomberg. Here is your nice consolidation. This was an unbelievable breakout for a core trade. Here is your add-on trade. And then, you know, as it moved up, people got a little wishy-washy because who knows what was going to happen there. Let me take, you know, this out of the way. For me, I talked about 11:30. That was my out after a nice ride, and I got out and I haven't got back in. You know, it's almost like you take this out of the way too. You know, it's almost like the pattern changed now. This is what I would say how you look at this. Let's get rid of all these lines that I put on every day, and look at it like this. All right, here is now your new point of reference. It held the 21-day, right? Held it, rallied off it pretty well. You have a pretty, you know, well-defined line of resistance right here. You can look at it a little bit closer right there. And I think it's okay. I wouldn't call this a bear flag. I would just say this is a consolidation after a nice move, and the longer it stays up here, the higher the probability. I think it breaks above the highs and gets to some of those macro targets on there for the stock. I think you could be in tier 1 now. I wouldn't be in more than that. If you're risk averse, you buy it here versus this low. If it broke 11.02, maybe you get out of the way and it holds the 50-day, which has been moving up. But all in all, I still think it acts well. It just, you know, it has to consolidate. It's been a huge move from 8, a nice move from 995, good continuation from 1070. So in here, it's just a little bit sloppy. Market's at 1500. People don't know exactly if we're going to pull back or continue. So I would give this some time to base, be in tier 1, and then I think the next time that people will start really talking about it is when it breaks above this 1180 with some kind of authority.
All right, and I know how you love Lulu. Dumbledore here says, what do you think of Lulu here? It's acting strong today after bouncing off support. What are the levels for support and resistance?
Lulu is just, it used to be one of the Momo stocks to go to, and granted, I do like the clothing. It's nice to do a spin class so you don't get hurt or go for a run, but it's been kind of out of favor. A lot of the retail names have been out of favor. Some of the retail numbers going into Christmas weren't what everyone thought they would be. And if you look here, Lulu, it's been very choppy. I've tried it a few times, and it's still sort of in the penalty box. You have it's below the 200-day, it's below the 8 and the 21. Yes, it's holding on to support by, a thread here. I think if you got involved today, okay, buy it versus slow. It's going to have a ton of resistance coming into these moving averages. Maybe it fills the gap. Right now, it's just a trade or a tier one. If you're looking at it, a lot of fundamental people say, oh, I'm going to buy it for a fundamental trade, but technically there's no reason yet except for it had a day one. So with that said, it's not a leader. Maybe it has a laggard type bounce trade, but has a lot to prove here as there's going to be resistance right in front of it.
All right, well, that is all the time we have for questions today. Scott, any closing thoughts?
Just, a lot of people, all they're doing is looking to fade the rally. I've been saying trade the rally, don't fade the rally. Don't try and overthink it. Don't try and be this superstar trying to call a top. Great technicians never really buy a bottom or short the top. They see a day to take notice, and then the days thereafter are the ones that tell you whether there's a bottom or a top in. And as long as we're holding the 8-day to 21-day and money's rotating, try and hold the portfolio approach. Try and hold things a little bit longer, and maybe don't trade as much size and take a few more positions. And just, keep learning what's going on. I know for me, I will say that this January or this month of this portfolio approach wasn't as good for me as it was last year at this time. Last year at this time, there was a different set of stocks that were working. I know tech was in play, Apple was on the run, and I was in there in the thick of it. And this, this rally so far, it's been really the transports, the industrial. So I'm trying to also learn how to hold different stocks, trade other names, just look at the chart pattern. So the new sectors always come about, new stocks always take new leadership. Don't be stuck on the old names that used to work for you. Look at what's working, read IBD, look at the top 100 names, look at the top 10, and that'll help give you some clues and some ideas, kind of like what you see on our virtual trade floor or in the morning call recapping off the charts. But overall, you don't want to chase a move, but if you missed it, figure out why, and then wait for the right setup to get involved, because there's still a lot of this year left. We're only coming to the end of January, and if you didn't make what you wanted to make in January, don't revenge it. Just wait, let the market come to you, and there'll be better setups as we move forward.
Well, thank you guys for all the great questions tonight. Meet us right here next Thursday for another Stock Twits Q&A session. Have a great night.